Hi everyone, and welcome to Price Action Trading School. This is actually session number 20, and we will talk about complete risk management guide. No matter if you have a small account, a big account, don't forget, guys, that Holy Grail exists in Forex trading. Holy Grail is called risk management. Of course, managing the risk is always much easier if you have a good system, if you have a good method to trade with, than if you have like an average method that you're struggling to make good entries with or make profits with. So it's always easier to do a good risk management, of course, when you have a good method. For everything that I talk, I have a proof from 2018. At the end, I did a complete upgrade to my Camerla MACD. I also started my FX book account, manual trading with my ECS.live. It's a Telegram channel where we post each day signals and trading ideas, complete with trade management and risk management. So feel free to join, or you can check it on our website. Of course, these webinars are for free, so if you still don't want to join and trade with us, of course, you can always do your own. I'm here to teach you, to show you how you can also trade successfully, but it's easier, of course, always if you have someone to guide you. So that is it. I'm also, guys, watching your questions. So if you have any questions, of course, you free to ask. Okay, guys. So everyone, I see Marcela is saying, as a newbie, I like trading and the analysis and want to learn from you, but only have a small account. No problem. It's always good to trade, so you can actually build your account up. David, hi David, says ECS live in super profits today. Yes, super profits. That is my job and my mission. As I always say, I really want the best from this. This is my life. This is what I love to do. And of course, it's always good to know that our friends and traders, of course, are enjoying our services and profits. So yeah, we are in nice profit last 4 or 5 months. So yeah, I'm very happy for that. Okay. So before we start, guys, let me just check everything is fine. Yeah, this is today's agenda: tripod of successful trading, compounding, and turning stop loss into a profit stop. This is also very important. Yeah. David, thank you. David is saying T, keeping it real. Yes, I'm still running 2 trades, and I need to pay attention to other screens to see what my other trades are doing. But yeah, definitely, I will teach you how to actually make nice profits from intraday trading, because my specialty is intraday trading. Of course, I don't do any investing like in forex, like holding positions for months. I don't care about it, really. For me, it's not trading. I'm not that type of trader. I'm a momentum trader, trading on 1 hour, 4 hour time frames, and that is what I'm successful at. Okay, first we will talk about tripod of successful trading. The tripod of successful trading is basically a profitable trading strategy. That is a systematic approach based on technical and fundamental analysis, also risk management and trading psychology. If one leg falls, everything will fall apart. Out of all these things, guys, the most stable leg and the most the strongest leg definitely should be risk management. I know that even some traders who have like 50% of success can be in small profits, but as I say, without doing any martingale or gambling or whatever, we can talk about it later or whatever. If you don't know what martingale is, just Google for it, you will see. I'm talking about normal risk management in the boundaries of the risk that is not bigger than 5 to 6% overall per day. Of course, if you feel like you might risk more, I'm totally fine with it, but you need to know that managing drawdown that comes from bigger risk trades is very, very hard. And it's not just hard, guys, but it's also very stressful. So you really, really need to think about it twice before you actually start doing it on your live account. So do not over risk, guys. It's very, very dangerous. You need to set 3 tasks. Primary task is not to lose a capital and stay on the flow for many years. Second task is to gradually multiply your equity figures. And the third task is to earn profits. And the real problem with many people is that they set a third task for the first place. They want to earn profits. That is totally wrong, guys. If you want to trade successfully, if you want to be and trade like professionals do, then you need to think about what I'm going to say. When you start Forex trading journey and when you start to trade Forex, the first thing you need to think about is how much you're willing to lose, not how much you're willing to win. Because if you govern yourself with the logic how much you're willing to win, you will lose. So Forex is about risk management. You don't trade the price, you trade the price, but effectively you trade the risk. Okay, so that is the truth in Forex trading. Forget about all those nonsense tales. Effectively, guys, in Forex trading, you trade the risk. Okay, you remember that. So how much you're willing to lose is your primary concern. On that, you need to base your risk and your stop loss. Don't forget that stop loss is dynamic thing. A lot of traders usually ask me, many traders ask me, Nenad, for example, is 50 pips of stop loss enough for each trade? I say, I don't know. For me, I don't care. If the stop loss is 30 pips or 300 pips, guys, it doesn't matter. The matter is the risk you put into the stop loss, because the stop loss is not fixed, it's dynamic thing. Risk is fixed. So you can put 1% of risk trade into a 30 pip stop loss and into also a 300 pip stop loss. Instead of using bigger lot size for 300 stop loss, you will be using less volume, less lot size, lower lot for trading. So guys, you need to, this is the fact. The matter of the fact is you need to think about stop loss as dynamic thing, risk as a fixed thing, and also trade always with a small risk. And if your system allows you, if it's successful, you can double the risk if you fail. I will explain that. Compounding is something that small accounts can really benefit from. And basically, the compounding is adding profits to profits. The first profit taken is added to account balance to create a new larger account balance. Then the next profit is based on and added to the new larger balance. The exponential growth of a sum of money by continuously reinvesting all profits is compounding. For example, you have $1,000, pounds, euros, and if you want to make 10% ROI each month, okay, not to reinvest, you would have made approximately 120% return that equals to 1,200. This is just a theory graph. This is how it looks on practical example, guys. I mean, this is true. This is math. If you can follow it, even better, guys. There is nothing to hide from this. If your starting balance is 1,000 and you make 10 pips per day with, let's say, 3 lots per day, then, of course, you will be making a lot of, let's say that you can actually do this with $10,000, because 3 lots for 10,000 is something much easier to manage than on of course on a scale of this. So let's say that your starting balance is actually 10,000, and you see now if you start with 10 one lot trade, so you're willing to risk, let's say, approximately 3% overall. Even with 3% of risk per day, you make 10 pips only, guys. This is how you can compound your account. Of course, this is just the math. It's very hard to do, because usually when you start winning, we either withdraw money or we care to risk more. That is not very good idea. So it's always good to actually use a lower lot size, let's say, and go with a slightly lower lots per day. So let's say that you can make actually 30 pips per day. Okay, then you see what will become. I mean, this is just the math. It's very hard, but it's guys, it's achievable. Okay, it is achievable. Okay, now let's say that lot size it's a little bit lower. We start with 1,000 guys. Okay, and watch this. This is just, as I say, hypothetical. It's very hard. It's not that. I mean, for some people maybe this is possible. For me, I haven't done it because this is a way too heavy. Okay, so you always need to keep it real, guys. Okay, keep it real. I usually say to people, it's always easy to trade with. I mean, for me, guys, it's easier to trade with 10,000. For example, I will show you now something. The account history here, guys. Okay, one of the accounts I manage. You see 10,000 account and the profit is 1,348. I'm slowly building this account with very conservative money management. But it's, guys, it's completely achievable if you know what you're doing. And this account is also connected to my fixed book. So you can, of course, check the stats. But if you use compounding, it will be really achievable if you make, let's say, you can make with at least, let's say, 10 pips per day. Let's say that you use even bigger leverage, okay, that you can use, let's say, only 10 pips per day. Then you have $1 per pip. These are dollars, guys. Okay, and you see, let's say that this is, let's say that we can actually change this column to actually let's see, just use fixed thing, guys. Okay, like I will do it like this, and I will do fixed thing. Just as an example, guys, starting with low risk. After 1 month, you would be 6% in profits with very small limited risk with only 10 pips per day. Only, guys, if you are, let's say, if you don't actually make any adjustments to the lot size, guys, I will show you what can happen here. After 6 months, your account will end with $13,600. That is very good because it's actually trading. It's 36% of return. It's 36 times more than the banks give you per year. So this is just with very small limited risk. Of course, as I say, you can raise your risk and you can gain more, but be ready for, of course, a big psychological problem if your account goes in a drawdown. Of course, for all of you who are watching this video for free, by the end of this price action training school, you will be able to get this compounding calculator for free. You will need to do some things, your homework and such, and you will get it for free. That is what I will tell you when all classes are finished. So compounding is great as you're adding profits to profits and you don't withdraw your money. Okay. Now, how you can actually turn stop loss into a profit stop? First of all, we need to mention what is risk management. Risk management is the identification, assessment, and prioritization of risks. It differs Forex from gambling. Many people ask me, is Forex similar to gambling? And I always say, and I've been always saying, you can gamble in Forex market, of course, by placing big risk trades, not using stop loss and such. But this is what differs Forex from gambling. It's the identification, assessment, and prioritization of risk. As I said in the beginning of the webinar, you need to think how much you're willing to lose. If you think about it, you will prioritize your risk and you will just know what is the biggest lot size in your account. You can go for how to trade smaller, how to trade bigger accounts, and so on. So risk management is crucial for success in forex trading. You need to have a good method, good system, but risk management is crucial. If you see forex as a gambler and you simply will not have any success in forex market, you will fail. And from a professional view, you are not qualified to be a real professional forex trader. Proper risk management is what different professionals from rookies and wannabes. Okay, you need to think that you need to take your mind step further, think about the risk, that you are trading the risk, because being an average in forex trading is not enough. You need to be above average to succeed, because still in forex market, big majority people lose their money actually because of psychology and because of the bad risk management and even maybe worse systems. Just imagine that you have some, let's say, bad system to trade with, and you apply even worse risk management. That is a total disaster. For successful risk management, I always use profit stop. It means moving stop loss in profit, securing profits as banks do. I usually do intraday positioning during the day, and as the price goes in my favor, I usually move profit stop. I do trading approximately at the top of the hour, because my trading method is MTF. It's a multiple time frame, and bigger stops bigger stops. For some people, those are normal stops, anywhere from 30 to 50 pips. We use Camarilla targets. Of course, you can use pivot point targets, and for stop loss placement, we use previous swings, lows and highs. This is just an example, guys. On our live channel, I will show you how it usually looks when I manage the trade. For example, we had a New Zealand dollar yen trade, okay, and this is how we do. When I posted the trade, I say move stop loss to 74.92. So we actually entered with New Zealand dollar yen, let's say around 75.05, and then I moved stop loss here, then I moved stop loss there, and we actually managed to get 21 pips here on the New Zealand dollar yen. The thing is, guys, that is important. If you lose, let's say 30 pips with 0.5% of risk, if next trade is 1% of risk, you only need approximately 15 pips. Of course, depending on the pip value of the pair, but it's, let's say, approximately 15 pips to cover for the loss. So you just need to think about it. Then even if you lose that second trade, it's only 1.5% of risk overall loss. Then the next trade is 3%, and you only need to have the half of total pips loss to cover for a loss. Even if you lose 3 trades in a row, then you will only lose 4.5%. So it's not like something unmanageable, but many traders fail simply because they want to risk more, they over risk, and so on. This is how I do it. For example, let's say this is just an example. Okay, an old example, but I like to use it because, guys, I've been trading for 10 years professionally, and very close to 10 years. It's actually around 9, let's say 10. So I don't need anything to change, right? I only change when I upgrade my method with even better filters, better entries. But regarding money management, I know this for a long time, and I don't need anything to change. Good things are always withstood the test of time. Simple as that. So let's say, just for an example, this is scalping example, but you can also use it on intraday trading. If your entry is to the upside, okay, for example, your entry is, let's say that your entry is here, okay, and the price goes in your favor here, and let's say the price broke this resistance, okay, you just move your stop loss. For intraday trades, I move my stop loss usually after price has made, let's say, 25 pips. I move my stop loss to 20 pips. Of course, this is now a general opinion and a general thing, because if the average true range of a pair is 50 pips, even taking 20-25 pips of profit is still good, because you will be taking 50% of its average true range. So the thing is, approximately after 20 pips, let's say, or if you're scalping, you can take 10 pips. just as the price goes up, you just move your stop loss in profit. For example, guys, I can use this example. I have a live trade right now on the dollar CAD. I will show you right away. I don't have anything to hide here, of course. This is a dollar CAD, and let's say we made an entry here. This is my Camarilla MACD template. So we made, let's say this was the zone. I should have made it earlier, but I made it a little bit lower. Let's say our entry was here. Now our initial stop loss is 33.67. Okay, 33.67 here. This is our initial stop. As the price moves, let's say it moves 20 pips in my favor. I just see if this is correct. Yes, 33, 15, 14. This is confluence of support. So if the price, let's say, moves here, yeah, I would still probably wait the price to move a little bit lower, because obviously this looks like if it breaks this low, it will go lower. But let's say some 20 pips, it moves 20 pips in my favor. Okay, let's say my entry is here. It's a little bit lower, but it's the spread. So let's say my entry is here. Okay, and I move my stop loss 20 pips in favor. Let's say it's something around 13 if the price breaks 25 pips. If I see that the price cannot break this level, then I can just move my stop loss couple of pips to secure, let's say, 15 pips. So I'm always paying attention to the chart, what the price is doing. Is the price making any reversal patterns, whatever? This looks like inverted head and shoulders that has already played out. So I would actually wait to see if the price breaks this level. Then it will go here, and I would just move my stop loss from the original spot 67. Okay, I will just move it here, securing approximately 20-25 pips. That is how I do it. I advise you also, guys, to do that, because it's what also banks do. Of course, banks trade on higher time frames, but for intraday trading, this is a good thing. Also, guys, you need to pay attention to the ATR, average true range. We talked about it. Just give me a few seconds. Give me a few seconds. I will move this to actually. Yeah, so you see, this is the indicator, average true range. 61 pip for the last 14 days. I usually put it on 5 days for intraday trading. So the average true range is 52 pips. So guys, this is the maximum you can have with intraday trade on dollar CAD, because this is the range. I mean, this is projected. I don't want to get all 50. For me, it's enough to get 20 pips. Contrary to, let's say, the GBP-Yen. GBP-Yen has the average true range of 113, so you can take 50 pips. For example, we took 45 pips also yesterday, but with this trade management, as I'm telling you. For example, you entered a trade here, okay, and price moved in your favor, let's say 30 pips. Okay, your initial stop loss, let's say, was here. Then if the price is here, you just move your stop loss, let's say here, securing 20 pips. Then the price moves even lower, you just move your stop loss again. For I usually move my stop loss after each 5 or 10 pips. I do some 2-3 pips increments, especially if I see that the price is volatile. I just move my stop loss after each 5 pips to new profit stop level. That is how you can do it. For me, it's pretty much obvious. It's clear. It's very, very easy to manage, and really I like to do it, especially on these 1 hour time frames, because I trade, guys, on 1 hour time frame. This is my Camarilla MACD method, and signals are very, very, very accurate. Approximately 80% of signals are accurate. So with a good system and good money management, your path to success in Forex market is obvious. The only problem is human psychology. We are prone to greed. We always want more, and when we get into a big drawdown, we try to actually manage it with improper risk management, and we burn the account. This is how I do it. I recommend 0.5, 1, and 1.5 to 2% for 3 consecutive trades. The first trade usually starts with lowest risk. If we win, next trade is the same risk. So let's say that we decided to go with 0.5% of risk initially. So we win, next trade is 0.5%. We win, next trade is 0.5%. We lose, next trade is 1%. we lose the second trade, so we lost 1.5%. Okay, then next one is, let's say, approximately 1.5 to 2% overall. So with smaller pip count gain, we can cover for bigger pip loss. Let's say that if we use 0.5 risk and we lost 30 pips, with only 15 pips with 1% of risk, we will cover for the loss. If we lose it only with 2% of risk, we can just go with 25, 30 pips approximately. You know what I'm talking about, approximately, and you will cover for the loss. That is what you need to, of course, calculate based on your account size. Let's say, guys, that we do that third trade, of course, with, let's say, 3% of risk. Okay, if we do the third trades in a row, when we lost 3 trades with 0.51 and 3% of risk, we only lose 4.5% overall. With 2% as the third trade, we will only lose 3 to 3.5% of loss. That's nothing, guys. You can also you might also consider 1, 2, 3. Okay, and yeah, this rarely happens with good system, guys, that you lose 3 trades in a row. Of course, not mechanically following systems, but you need to know if something is going on in the market. Just wait, guys, for the price to settle, because of algos are trading also. You need to wait for the price to settle and then pull the trigger. Yeah, if you know how to do it, you will hardly lose 3 trades in a row. But if it happens, then again, you need to be conservative with money management and reset again, 0.5, 1, 3, and so on. Okay, you also might consider 1 to 3%. So for 3 trades, loss 6% is overall loss. Again, it's manageable, guys. If you have a good system, you can just do 5, 6 good trades with 1% only of risk, and you will cover for that daily loss. For these guys, I recommend, of course, money management calculator. This is money management calculator here. Yeah, I mean, I have different accounts. I have smaller accounts, bigger accounts. All spreads are different here, you see. So yeah, you might actually try to do it yourself. Money management calculator. For example, we decide that risk percent is 0.5. Stop loss is 32 pips. And for this account, guys, it says that calculated lot size is 0.19. Current spread on the pair is 3.5 pips, you see. So it's pretty much easy to manage with money management calculator. Let's say that I want to use 3% of risk. My stop loss is 50 pips. So calculated lot size for that trade would be 0.74 lots. You need to do this. If you don't do it, you don't know what is professional trading. You are trading by heart, just following trades blindly, and it's just a matter of time when you will lose. That is my opinion. Of course, maybe I'm wrong, but that is my opinion. That is why I'm saying it's always important that you follow your risk management, guys. Very, very, very important. Okay. If you have any questions, feel free to ask me, guys. For money management calculator, for our ECS live members, it is free, of course. For all of you who are watching this, well, after price action training school ends, you will need to complete your homework and see if you actually pass the test. If you pass it, you will be receiving some templates with, of course, money management calculator as a gift. But that first thing first, we need to go with price action training school, finish it, and then freebies, of course, for all of you who are still not members. Thank you, guys, for listening. I don't see any questions. I hope that you understood this. This webinar is being recorded. It will be uploaded to YouTube. If anything is not clear, feel free to leave a comment and I will answer. Thank you for listening, guys. As always, cheers and trade safe, and see you next week.